Welcome back to the Daily Hunt. I'm Henry, and in this daily show, I try and cover a technical analysis of the markets. I give you guys some insights and ideas as well. Previous videos, I've given you some opportunities like shorting gold from 4.3K and many, many others. Today, it's going to be mainly about crypto and the sell-off that we saw yesterday and how it's setting up perfectly around the 100 zone for Bitcoin and then around the 3,100, 3,200 for Ethereum. The last few days, I've spoken about crypto quite a lot in the sense that we've seen that sell-off after hitting 115K on Bitcoin, and that was a key moment to take a short position. It was holding nicely around the 106, 107 level, and then the last 2 days it's completely shattered that level and gone under 100 yesterday. Now, it's not the end of the world here for crypto. This is why I want to cover where the situation is and how we'll probably be still moving up and down and figuring out here where the market will be going. As a swing trader, I have not taken a position since a few weeks ago when I took a small long position I mentioned here in the channel. And then with stocks, it's also in a situation where it's slightly overextended with the key indices, needed a dip. We had that dip yesterday, and it's worth seeing whether today we get a bounce or we have that distribution that I've been speaking about for the last, I'd say it's a week or so, okay? Since last week. Now let's get right into the charts. I think it's important that we go straight into the charts and start analyzing the situation. One of the things that I pointed out a couple of weeks ago was a strengthening dollar. And it's important that we cover this again for you guys to understand where the levels are and what I think might happen. Right, so here we have a strengthening dollar. I've mentioned this a number of times. Since September, I've been talking about this double bottom bullish divergence. In reality, we've also had a bullish divergence right there. It hasn't been picked up by the indicator, but we've had a bullish divergence. A lower low, higher, a lower low on price, higher low on RSI. And I was expecting a strengthening dollar. This is why I was very, very cautious in the last 2 months or so. Since mid-September, I felt like we would probably sell off. And around the 22nd of September, 23rd of September, I sold off all of my crypto and I only took a trade. I think it was around this period, the 15th or I think it was the 15th or the 23rd. I'll show that later to you guys for crypto. When it comes down to stocks, it's a completely different story because we can pick the best opportunities. And I've been able to, not very lucky, but I've been able to pick some of the better stocks like quantum plays, AI stocks that I felt would still show momentum regardless of the situation with the dollar. And those have been performing quite well for me in the last 2 months. But with the dollar, what we've seen is a strengthening dollar. We've seen and this is normal because if we look at this sell-off, a reversion back to a mean price or an average price would be seen as normal. I always had this 101 level as a target. Now, if we go to 101, I think the rest of the market will drop. But maybe this 100 level is a key level, and this is a bit overextended now, slowing down. Hopefully you guys can see it here. Slowing down, overextended. We could probably see a pullback and then maybe another move a little bit higher, and this will probably tick up slowly to higher levels. So the dollar, in my opinion, is a bit overextended here. So we're probably going to see some growth in crypto, maybe other forex markets like the euro and the pound might see a little bit of growth here compared to the dollar. And only if there's an unexpected event where this shoots up here, and there's some fundamental reason for this to move higher. So a strengthening dollar, really what it was showing was profit taking. So a lot of traders and investors that I know started taking their profits around the end of September. This coincided with gold going to all-time highs, or approximately coinciding with those euphoric levels of gold. So around this level here and this level here is where I started seeing a lot of profit taking in the stock market, and I think a lot of fear kicked in with long-term investors. Now, it's not to say that this is all correlated and related. I still feel like, as you can see here, although the market is selling, gold still doesn't have an opportunity to move up higher. I think gold has been moving with the rest of the market and has just been moving at a higher pace as it becomes uncertainty during the rise of the stock market and crypto as well. But it's been one of those situations where the dollar is the key. Profit taking happened around late September. There's a bit of distribution as well. I think some of that money from stocks moved into gold, because you can see it here that it went on overdrive with gold. Very euphoric, needed to come back down. We took that trade, shortened this, and then now we're looking potentially for a rebuild of structure and for this to decide the direction. So yeah, but the dollar was a profit-taking opportunity, but I think we could come back down a little bit. Okay. So if that happens, now I want to go into crypto and I want to go into what can we see with crypto. I think the best thing to do is maybe cover Bitcoin dominance first. Actually, I think Bitcoin dominance isn't relevant until we start talking about altcoins. Okay, so let's go to the Bitcoin chart. So what happened the last 2 days is in my opinion, a gift, because if you're able to buy at these lower prices, let's say we're able to enter, even if the Bitcoin goes down to 90. Let's say we're able to enter around the 90 level, and you didn't take a short yet around 95 or 100. If Bitcoin goes all the way down to 90, for example, we might be able to enter around 95 or 100 on the buy side. What will happen is they're most likely going to bring it back up to at least 120 or maybe 150, which is the next target in my opinion, 130, 150. That gives us a nice opportunity to gain around 30% or so, maybe even up to 50%. I think that's a natural gain for most trends that develop with Bitcoin and crypto. Is around the 30-50 range when you look at them. I'm talking about trends on the 1 daily chart. Of course, on the weekly, you might see slightly bigger gains. But we spoke the last 2 days about how it's holding. And if it doesn't move up here and break above, we saw the resistance on the Sunday, came back down. And then the Monday was the last hope of this holding. But we broke below and then we sold off. 100 was pretty much a guarantee, just because on the monthly chart, we mentioned that, I'll show you, on the monthly chart, we had a level, we basically are showing weakness, and I think this is the other factor why I think we can go a little bit lower and maybe into more selling off, and we have to be very, very careful about being in, on trades on the long side, is that we could see this maybe going all the way down to the 20, right? So the 20-month MA around the 90 level, and then maybe rebuild. In the previous sell-offs, that's where it rebuilt. And we've also had the bearish divergence, which I think I've been very cautious about it for the last since this move here. I thought maybe we don't have a bull market anymore, but we end up buying around the 75 level, buying up around 75 level, 80 something, and then we traded this move. But overall, the market isn't looking that strong. I think capital's flowing into AI, is flowing into other industries, and it's just retail traders which drive crypto more than any other group don't have disposable income in reality. They're being squeezed with higher taxes. They're being squeezed with cost of living. So it's a very difficult situation, and it looks to me that if we don't hold this final support here, I think the move is finished. We go to 90, maybe come back up again to 103, 105, resist, and then we can sell off quite deep here, and maybe a rebuild zone is around the 50 on the RSI. Just there's no relative strength. That's really the reality of it. There's no buying. There's no strength in the market, and there hasn't been for a long time. The April sell-off was a broad market opportunity where everything sold off and everything was being bought, and we managed to trade Ethereum during that move and make some decent gains there. But that's the only fear I have. I feel like if we don't hold this 100 level or around that 100 level, we go to 90, and then yeah, we can either rebuild there, but it's looking quite weak on the monthly. It's a problem. It's a real problem for crypto. And Bitcoin will drag everything down as it has done always. So it's always worth watching how Bitcoin moves. Something that gives me a bit of hope that we can see a significant move higher is the fact that we have Ethereum now around that 20 MA zone. So we hit what would have been the more deeper pullback. So there's two pullbacks I was looking at, which was a 3.5K and the 3K level. The deeper pullback has happened. Now, whether we build from this level for that move to around 6K or 5, I have 5.7K as my next level. Whether we rebuild from there, it's an important question because we need to hold this. Now, Ethereum tends to sell off a little bit deeper than that. As you can see here, kind of does another wick maybe, but it's looking pretty good so far that if we hold 100, if we hold the 3K zone, 100 with Bitcoin, 3K with Ethereum, that we still have hope of a significant move in crypto. And this could be a move where institutions are buying here, accumulating slowly, maybe allow the market to go a little bit deeper, could go all the way to like 2.8, 2.6 maybe, and then we build on Ethereum again and we move higher. I thought this was very overextended in March, April, and it was a perfect opportunity to trade up higher on the 1 daily, and that's where we ended up buying this trend. For like 3-4 months, we ended up taking like 4 or 5 trades on there, making some decent money all the way up to 4.5K. So we bought 1.6, 4.5. Now, if this is a gift, another gift, in my opinion, a dip, if we hold, we then have that move where we can make some decent money from, let's say, 3K to around 6K, maximum 6K, in my opinion. As we overextend to these levels here, then we get another dip and then we build structure again. But that would be what I would call a potential alt season, or a hope of an alt season still remaining there around that 3K zone on Ethereum. But I feel like Bitcoin needs to hold here. And again, the final place that Bitcoin can hold is 90K, right? If we hold there, maybe we still have hope for a rebuild, but it's looking very tricky. The short side was a good opportunity for us, and we could have taken that trade. I didn't take the short trade. In fact, I'm waiting here for the bounce because on the monthly it still looks like we are bullish. As long as we're above that 20 on the monthly, it's okay for me, and it's just a reversion back to the average or the mean. It's normal price action, nothing to worry about. On the daily chart, it looks worse, of course, and obviously on the shorter time frames, it looks much worse. I'm not a long-term investor, so you're not, I have some Bitcoin I bought around 10K, but other than that, I'm not a long-term investor in crypto. I try and swing trade these opportunities and holding nicely this support 3 that I've mentioned for a number of weeks. We are retesting this level here. Now it's a matter of, it's overextended. It will definitely come back up, maybe to 3.5. We have to see how it does there. Maybe it comes back down, builds, slowly. We would want this to build something like this, something like that, and then that would be us rebuilding from this base, okay? And I think it's safe to say that this move didn't happen. So we can move this here, but that just makes it even better for us, okay? Remember, these drops are a gift if you know how to trade them, and it's a rebuild of structure, it's liquidation events. However, the market could continue to sell off for a significant period of time, and I might not even be taking any trades. So it's also a problem if you're just focused on one market. But when you're trading stocks and you're trading other markets like we are, this 1 to 10 would be absolutely amazing. Where we're making around 60% all the way up to 5.8K, 5.7K here. That would be an amazing setup. And if I'm an institution, I'm liking this. If I'm a retail trader, if the structure builds up properly, I'm also going to be liking this. So when I'm thinking about how I'll be trading, it's looking at from a perspective of other traders and investors. Okay, so that's looking pretty decent there for 1 to 10. I mean, that would be amazing if we can get something like that. We can risk maybe 5% of my portfolio on this one and make 50%. But I with Ethereum, I usually I have a separate account where I'm quite heavy with Ethereum, and I go all in. Okay, so that's Ethereum. Bitcoin. If we're looking at Bitcoin and the kind of the risk rewards here and why it might be interesting for the long side, we'll cover that now here as well, and then we'll move on to stocks and the other markets. Okay, so key support here. We hold this. We then have an opportunity for us to build, and again, this might rise up a little bit here, and then like I said, we have an opportunity to build here a 1 to 5. If we go all the way to 130, a 1 to 8, that is appealing to a lot of investors and traders, and it's much better than where we were. Okay, much better where we were. If we do where we were, this is what we were looking at, 1 to 5. So it's becoming more and more appealing here for the long side. Not only have we hit some key zones, but long-term investors might like it, and they might be willing to hold through here as well with these ones. Okay, so it's quite nice, this setup with Bitcoin as well, and of course altcoins are in a similar position where they've been completely crushed. We have like Cardano, for example, has been as halved in price, and we could go even lower here if we get resistance on the Bitcoin and Ethereum. And Bitcoin and Ethereum could consolidate while these other ones continue crashing. So you got to remember, every time you get to a resistance on Bitcoin and Ethereum, after a rise up, altcoins could keep on moving lower and lower and lower and getting cheaper and cheaper until they tighten, consolidate, and then we move up higher. At the moment, this is the reason why we are holding up. There's a consolidation here around the 50 cent level. And for somebody that's traded these two moves and made some decent money in June, July, we also traded some moves in April. It's pretty good, you know. And there's many other ideas that I share in the Discord group. So yeah, feel free to join. The link is below in the description of the video. Okay, so that's crypto. I want to go now to stocks, cover the situation there. We continue to sell off here. I had to go all cash, and there was a reason behind that. Palantir sold off in my portfolio, so I ended up selling Palantir, and then I just thought, let me just take profit with the other ones because I was already in profit, and we'll just re-enter. It's not the end of the world. It's looking like this 5%, 6% dip that I mentioned over here to go all the way down to 6.3. Yeah, it's kind of setting up here, and the bearish divergence is adding additional weakness. We need a dip after seeing continuous gains. A logical dip would be the 20 MA on the weekly. Okay, from here to 6.4 would be logical. It would be okay. It would be healthy. We usually have nice extended periods like that. Then a dip to the 20 on the weekly and a rebuild. Then a dip, maybe even lower, then a rebuild. But that's a nice level to rebuild from. And I think we're almost guaranteed to go to 6.6. If we want to rebuild here, we are showing some signs of weakness with a bearish divergence here on the weekly. And I think that sell-off can be quite nice for bringing more capital in. A discount of the sort would help the market for sure. The VIX also spiking up around the 19 level. It's showing a little bit of fear coming in, volatility, and that's normal. And if we can get, like I said, a deeper dip, maybe we see this rising up back to around 25, 23. Normal levels for then to see buying up again. One of the things to worry about this week are the non-farm payrolls and the unemployment rates. We have to monitor those and see how they increase or decrease volatility. But they're very, very important about when we're looking at interest rates and when we're looking at the situation in the job market. I think there is problems with the job market. We've seen Amazon, UPS, a number of other companies cutting staff, moving to AI, moving to robotics, automation, and that will cause a problem. That will cause a problem in the economy eventually. It's just a matter of when that will happen, that replacement, and us timing it. As long as you're able to manage your risk, you're going to be okay. I have no problem going back to 100% cash, especially when you're seeing a strengthening dollar. I have no problem holding cash and then waiting for the market to pull back. And that's exactly what I'm doing right now. I don't want to rush in. I think it's been a very volatile market, and January to March was very difficult. It was so difficult to make any money. And of course, you could have shorted a little bit and made some money, but even then, the shorts weren't really working. I took a few shorts and they weren't really working. At the moment, we've had a nice run. It's okay if we get a bit of a pullback, and then we can go, later on in the year, second half of November, maybe early December, we start seeing some momentum building again, and we can buy new opportunities at discounts. In terms of the S&P, where I predict it, I think I drew something on this chart, the SPX chart. So it'll be worth having a look at this. I repeated this a number of times in the previous videos, but as you can see here, drop into around that 20-year main zone, following the drawing that I made a couple of weeks ago now, which is, this is what a distribution would look like to me, and it would be healthy for the market. Now, so far, it's following this to perfection. You can go and watch my previous videos in the last couple of weeks. I've drawn this since we started spiking up here around this level. I think it was the Sunday, around this level here. I drew this with the idea that this is what I think a distribution would look like, and I've just kept it in the sense that, if we get that drop, then we have this perfect opportunity around the 6.3 level to buy up again and continue moving longer. Now, of course, this could set off even worse, because we have Nvidia's earnings, and if that comes in weak, if there's some problems there where the market does not like the earnings, we can then nosedive a little bit deeper, maybe all the way down to this level here. But I think a logical move would be around 5 to around 9% drop, and that would be healthy, normal, and then we can rebuild from there. That's the kind of approach I'm taking here. Yes, of course, there's going to be individual stocks that we can trade, but when I'm looking at this list, look, my previous trades yesterday, 13% WRD. We have some huge losses here on SoundHound, 11%, Jiva. So all the growth stocks are losing, and then we have some of these more consumer discretionary, so Dole, 1%. We have biotech. We have TGX, so TJ Maxx or TK Maxx here in the UK, also gaining because this is more safety. And we've had gold plays doing okay. Baidu was a surprise, which I think could be a nice move, and I shared this in my Discord group, but I'll share it here as well. I just really like the price tightening here, the way it's structuring. I like this potential breakout. The support zone here is very, very nice around the RSI 44. It's building nicely here, and I think we could be in for a surprise with Baidu moving higher. So it's on my list. It's probably the only stock that I want to be watching today, and might be willing to take a trade on. Okay, in terms of my portfolio, I end up taking profit on Nvidia, Palantir, and CRM. So we took profit there. I end up taking profit. I think this was about break even with Tesla. We had a bit of volatility with Tesla. I'll show you. So it didn't really push through to higher levels. So around break even with Tesla, and makes sense. I mean, we end up entering here, exiting around here. There's no momentum. It's still building up, and it could do well. But I don't want to be holding anything during this market. As you can see here, I drew some of my analysis. WGS has been quite nice, and it's holding up. So I held it on one portfolio. I sold it on the other one just to kind of scale out. And yeah, it's okay. The rest, I did an amazing job exiting. I feel like the exits were perfect. So we'll cover just, for example, QBTS. I ended up rebuying this on Friday and then exiting on Monday as it was showing weakness. But it's worth covering these because I think one of the things that beginner traders struggle with, or even traders in general, is knowing when to sell. So, it was ticking up here around the 31st. So I end up buying, and then on the Monday showed weakness, so we end up selling. Okay, and we're letting this now develop as it should. I took an early trade here, small position. Tried to be a little bit riskier on the move. I did that with Rigetti, QTS, INQ. Kind of lost a little bit my profits. But we've made significant profits on this one a number of times, actually. This is the last trade. So it's kind of now doing what I expected it to do. And this was drawn a couple of days ago. I mean, you can see here when it was drawn. I think it was drawn around this dip where I thought, okay, we can go back up, retest, find some resistance, and then rebuild here for the move up higher. And that's kind of what it's doing here. So we just have to see how this rebuilds and restructures. Also sold like Open, OPEN, PL, we sold that. SMR looks very good for a little while, and then we end up selling it. And Dave spiked up yesterday with earnings, but we end up selling that way before, around break even. So just really managing risk here and managing exposure to the market. That's really what I'm doing more than anything. I'm not really making any money at the beginning of this month. It's such a tough market. So it's all about managing risk, managing losses, managing exposure, being in a position where we preserve capital and then we position ourselves in on the long side when we're ready. As you can see here, Baidu now triggering one of my alerts, showing me that potentially this could be one of the trades I can take in this period that might outperform the markets and show relative strength. Okay, so here we are with new scale, back down. We were in profit. We end up selling. I think it was last week or this week around this break-even point, and a little bit of gains actually, and we're looking to see that another rebuild here. So it's about 1, 2, 3, 4, 5, finding support around this level now and rebuilding. Again, selling at the right time is key. Preserving capital is key. Don't be afraid to cut positions if they're not showing strength and they're not showing momentum. That's how I operate anyway, and I'd rather be in cash than take risks. Okay, I think that's it. Look, I can cover gold, I can cover US oil and all that stuff, but I think I'll wrap up for today with this message, as in you need to know when to move from being aggressive in the market to being cautious, to scaling out, to managing risk, and to then being 100% cash if you have to be. And if you know how to operate with the market, know when to go in aggressive, when to use a little bit of leverage, when to not go in aggressive, maybe buy risk of 0.5% on a trade. If you learn how to do this, it's going to be very difficult for you to fail, right? It's going to be very, very difficult for you to fail because you'll be able to take advantage of just the momentum that the market will naturally give you at some points. Capitalize on that. And then if you're protecting your capital, using stop losses, minimizing risk, scaling out, scaling in, naturally you'll be outperforming the markets. And that's how I approach trading. All right, take care. That was it for me today. If you want to subscribe, click the subscribe button. Make sure you like and comment as well if you have any comments. And you can also follow me on social media such as Instagram, TikTok, and my X account.